Yes, Singapore property price is finally going to crash. Are you thinking the same too? Will Singapore property price really crash? And how much will it drop? Please watch on and I will share my view on this. By now, if you are still not aware of what is going on in the market and news, this is just a quick summary. US President Trump has announced sweeping tariff on 2 April Liberation Day, 10% baseline tariff on most imports, country-specific reciprocal tariff were introduced, leading to an effective tariff rate of up to 54% on Chinese goods, which escalated to as high as 145% following retaliatory measures. The worldwide stock price plunged over $6.6 trillion wiped out in just 2 days. The S&P 500 dropped 10%, Nasdaq for 11%. In Singapore, the STI index also tumbled more than 8% in one day, marking one of the worst sell-off since the pandemic. Although the stock market has seen a strong rebound recently, thanks to Trump's announcement of a 90 days pause and a baseline 10% tariff on most countries, the underlying tensions remain unresolved. The US-China trade war continues to escalate by the days, and markets are still on edge over what could come next. With the US teetering on the edge of recession, how will this impact Singapore? Will our property market crash too, just like the stock market? Well, there's a popular belief that stock market and the property market are correlated, meaning to say what will happen in the stock market will happen to the property market. So now that the stock market has crashed, will the property market crash too? There's a popular belief that there's a time lag of between 6 months to 1 year for property price to follow the stock market. Okay, so we shall examine whether this history will repeat again. As I always believe that history don't repeat, but it rhymes. Okay, this is said by the famous Mark Twain. Okay, so without further ado, I will show you the past trend and we shall examine what happened in the past, the major crises, and we will see what is the impact of this crisis to the property price. So you can see from here, this is a chart of the Singapore property price from 1995 to 2025 over the past 30 years. I can't show you before that because I don't have the data, but we can see from here, right? One of the most major crises, which is the 1997 Asia financial crisis in 1997. Okay, you can see from here, the the property price has dropped by almost 30%, 39%. Okay, so this is really a very big impact. And next major crisis was the Dotcom Bubble. Okay, so in Chinese they say 祸不单行. Okay, after 1997 Asia financial crisis, not enough. Year 2000, one more Dotcom Bubble. Okay, so what happened in the Dotcom Bubble? Okay, but before that, right, after 1997, the property price dipped by almost 30%, but it actually recovered a bit. Okay, almost back to the same level, close to 1997. But because of the Dotcom Bubble burst, property price dipped by another 21%. So you can see from here, right, actually the impact to the property price is quite significant. Okay, but back then, the situation, is it similar to the current situation now? I would say that back then, the situation is slightly different because back then we do not have this thing called cooling measures. So the property market was quite speculative during that period of time. Okay, what do I mean by speculative? Speculative means that there are people who can own multiple properties easily. So back then, because there's no such thing as a ABSD and TDSR, so people can just show funds to the bank and then they can borrow money easily, or they can try different banks, they can give different loans. All right, and it's very easy to own multiple properties. I still remember last time I ever met one owner who is staying in HDB, and he told me he owned 3 or 4 condos. So back then it was so easy because the down payment was just about 10%. All right, so right now it's 25% down payment. It's much more difficult to own a property, and also plus the ABSD tax and TDSR, which limits the borrowings. So back then the market was more speculative in nature. There were a lot of foreigners coming to Singapore to buy properties. So when this crisis happened, right, there's a very deep impact to the property market because all these owners who own multiple properties, right, they have difficulties to hold on to the properties when the market turned back because they took on a lot of leverage. So when the market is bad, right, they need money to fund their business or to cover the mortgages and all that. Okay, so right now the situation is slightly different. So I shall go into the next crisis and you will see what happened. So the next crisis is the Lehman Brothers crisis that was in 2008. Okay, that was around the timing when I joined the real estate industry. I think it was around 2009. So back then I still remember it's not easy to serve buyer because the market has just crashed. All right. So we shall see how big was the impact of the Lehman Brothers. Okay, so from here, right, because I actually populated the chart by based on 1 year interval. Okay, so you will notice that it's quite funny. How come from 2008 to 2009, there's no drop in property price? In fact, it's an increase. All right. So, but I break it down into quarterly, and then you will see the result. Okay, so this is by quarter by quarter basis. So you can see that from Lehman Brothers was at this point, okay, Q3 2008. So you see after the Lehman Brothers crisis, right, actually the property price did drop a little bit before it climbed up, okay. So what is the extent of the drop? Okay, you can see from here, the extent of the drop is about almost 15%. Okay, it was also quite significant. Okay, anything that is 15% to 20% or more, right, I would say is quite a significant drop. Okay. So you can see, but what happened after that in just 2 quarters, actually the market started to rebound. It's a V-shaped recovery, and the recovery was so strong that it actually increased more than what it dropped. Okay. From 14% drop, it rebounded back by 28%. It's almost a double. So what happened back then? Why did the market recover so fast? Okay, because back then, this Lehman Brothers was a US problem. And after a while, the Singaporeans realized that, hey, this is American problem, nothing to do with Singapore. So, in fact, there was not much impact to Singapore. So, the market rebounded very fast. So, after the Lehman Brothers crisis, right, it was actually smooth sailing all the way. You can see from here, after 2009, the price continued to go up. It was 风平浪静, that means smooth sailing all the way. Okay, there was no other crisis. Okay, except this one, 2011. I think this is not a major crisis. This is something like avian flu or something like that. Okay, I'll check, but it's not a major crisis. All right, so it was all the way like 风平浪静, smooth sailing. Okay, so what was the reason that the property price start to continue its uptrend? Okay, if you read back the history, right, there was actually a US printing of money. They call it the QE1, QE2. So they continue to pump money, to print money, and this causes the asset price to go up. Okay, which is why you can see the property price keep on going up from this point onwards. Okay, and as a result, okay, in 2013, right, okay, to 2014, okay, in fact, it's 2013 to 2015, you notice that, hey, how come there's a drop of 7% in property price? Okay, is there a crisis back then? Actually, there's no crisis. Okay, the main thing is because if you remember what I mentioned earlier, the property price keep going up, and the government see that they don't want an asset bubble to be formed because there's a lot of printing of money, and money keep flowing into Singapore, and our asset price keep going up. Okay, so to prevent a bubble, the government actually came up with several rounds of cooling measure. I remember back then was about 6 to 7 rounds of cooling measure. Okay, so you can see that property price start to dip from here. So how many rounds of cooling measure? Okay, so I will show you. So what is this cooling measure that causes the property price to dip by almost 7%? Okay, from 2013 to 2015. Actually, it's called the total damage to Singapore residential property, TDSR. Okay, I'm joking. It's not total damage to Singapore property, but it's called total debt servicing ratio. So you can see from here, these are the cooling measures that were implemented just in year 2013 alone. Okay, mortgage servicing ratio, this one is more for HDB. Total debt servicing ratio, which is what I mentioned. Okay, so last time there was no such thing like if you want to borrow money from the bank. So now they come up with these standardized calculations that you can only use 60% of your income to calculate for the monthly installment. Of course, right now they are adjusted to even lower at 55%. Okay, then of course there were other things like ABSD was increased or implemented back then. So total, right, you can see from here, okay, I think this chart will show you better, okay. You can see from here, there are so many rounds of cooling measure. All these are cooling measures, except the one in 2017, I think. This one we exclude because this one is actually removing of the cooling measure from 4 years, seller stamp duty to 3 years. Okay, other than that, right, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, 9 rounds of cooling measure. In fact, some of the years that I showed you earlier, in 1 year, there were like 2 or 3 cooling measures. So if you add all these up together, right, that's at least 10 to 13 rounds of cooling measures in place. So right now, right, the environment of the Singapore property market is, I would say, is less speculative, meaning to say, the buyers that are buying the properties, they can well afford the property because of the TDSR calculation. So it actually take into account of their income, whether they own another properties. All these were calculated into the equations. And right now, what I see on the ground is that many owners, they only own one or maximum two properties, okay, because they don't want to pay ABSD. So what they will do is husband buy one, wife will buy one. So it's very well covered within their means. So if I were to ask you, right, if you only own one property under your name, okay, and if the property price were to crash by 20%, will you sell your property at a 20% loss? And you just have one property. Plus, you can use your CPF to pay for it. Okay, you don't need to sell at a loss. In fact, you can just hold it. I mean, you drop 10%, 20%, 30%, it doesn't matter because I got the holding power. All right. And as long as for investment property, right, as long as I can rent it out, I don't need to even rent it out to cover my installment. Maybe I can top up a little bit, or I can use my CPF to pay for part of the installment. So even if the renter does not match the monthly installment, right, actually I do not even need to come out with cash because I can use CPF to pay part of the monthly installment. So the cash top up is lesser. So in this case, right, you can see that nowadays, most of our Singapore owners, right, property owners, they have very strong holding power. So it's very unlikely that they will sell at a loss. Okay, I won't say it's impossible. There may be one or two who probably need money urgently. There may be one or two, but I won't see a large proportion of these people dumping their property price at a major loss. Okay, so a range of a small percentage may be possible because some of these genuine seller, I call this genuine seller, meaning to say that they already probably bought and committed to another property, okay, or they so-called collect the key to their new house. They need to sell their current place, but because of the market condition, right, they are more willing to negotiate. Okay, so they can actually adjust the price a few percentage lower, even lower than the last transacted by maybe 5%. Okay, but still they make quite a significant gain. Probably the property price already appreciate by 30%. So they just sell at 35% gain. So they don't lose money. They just sell it slightly lower. Okay, just that so that they can actually transition to their next property. Okay, so next is the most recent crisis. Okay, it's not say all the way from Ping Lang Jing smooth sailing. There was actually one major crisis back in 2020. Okay, in fact, it was the end of 2019. Okay, so what happened back then? COVID-19. I think everyone is familiar with COVID-19. Because of that, everything come to a standstill. We cannot go out to work. We have to stay at home. So everything come to a standstill, and the government really come in and intervene to control the market, to make sure that people can afford the property mortgage, business will not fall. Okay, so what happened back then? Okay, let's look at the chart. Okay, in 2019, end of 2019, there was COVID-19. So our property price did a little bit. This time round is only 3% as compared to last time 20%, 25%, 15%, or even 30%. So why is it that it's only 3%? So I would say one of the reasons is because the government was very proactive back then. They come up with a lot of measures to help business to survive. I still remember back then they allowed homeowners to defer their installment payment. Okay, so they can actually those who are more cash tight, okay, they can offer this deferred payment. So they help a lot of homeowners to prevent like defaults in property payment, okay, and also business owner to survive so that they can pay their workers and all that. Okay, this is part of the reason, and I really applaud the government for doing that. Okay, but one of the major reasons is also because of all the cooling measures that were in place, like the TDSR, the ABSD. So because of all that, right, the market has become less speculative. So remember the keyword is called less speculative. Okay, in a less speculative market where there are not many speculators who are in the market to flip properties, they own multiple properties with the thinking, right, to make fast money, like flip the properties, okay, not for own stay. Okay, in an own stay environment, the market is less speculative. So in a less speculative market, right, the property price is unlikely to crash. Okay, so in my opinion, right, whether the Singapore property price will crash due to the tariff and the trade war, I think it's not impossible. Okay, definitely everything is possible. even a 1% chance or the 0.1%, 0.001% is still a possibility. But I would say the chances of that happening is quite low. Unless this turned out to be a World War III. I mean, the trade war escalated to World War III. It could be possible. Okay, I wouldn't say it's impossible. Nothing is impossible in life. Okay, when it become World War III, yes, maybe. Okay, because at that time, a lot of people were panic. Okay, panic sell everything. So it's not impossible. That's why I would say it's a low possibility. Okay, but not totally remote. Okay, but why I say that is very low possibility is because of all the cooling measures in place. So remember, just now I mentioned there were about 10 to 13 rounds of cooling measures in place right now. All these are what? All these are like your car brakes, okay? So in the event of an emergency, the government has 13 brakes they can tap on to, to stop the car from crashing, all right? So these 13 cooling measures, if really the property price were to see a imminent crash, that means the government see that property price start to drop drastically, like people start to panic sell, there were a few fire sales, so the government may intervene. So how they intervene is that there is a possibility that they may remove some of the cooling measures. Okay, so imagine right now there's a 60% ABSD on foreigners. What if suddenly the government remove this, maybe from 60% drop to 30% again, like what it used to be? Will this encourage the foreigner to come in to buy? Or maybe they can even remove totally. There's no more ABSD. Singaporean also, you can go ahead and buy multiple properties. Okay, I'm sure that this will help to spur the market again. Okay, but of course, whether this will happen is still hard to say. But this is one possibility that the government can tap on. So all these are the emergency brakes that the government can play around with. It's not like in the past. So I would like to show you this chart, right? Actually, it's very clear from this chart. You can see that this first, I will call this probably like the first 15 years, okay, actually just now it's about the first 15 years. There's no cooling measure. You can see all these are CCC. All these started from 2010. Okay, so for the last 15 years, there were a lot of cooling measures, about 10 to 13. But before that, there was zero. So this was a speculative market environment, whereas this is a less speculative market environment where there are more homeowners than speculators. So right now, our property price is more resilient, as what we can see from the most recent COVID-19 pandemic. There was no panic selling. The prices only dipped by so little, only 3%, before it started to recover. And one more thing I want to highlight is that if you notice, right, every time there's a dip in the property price, okay, like here there was a dip, the property price actually rebounded much more than the dip. And this round, you can see there's a dip here during the Lehman Brothers crisis, but it rebounded much higher. Okay, and then here is due to the cooling measure, there was a slight dip of 7%, but the market recovered even much stronger. Okay, so every time, that means what I observe from here is that every dip, right, is followed by a strong rebound. Okay, and the next high is always higher than the previous high. So one more point that I want to highlight is that if you notice, right, our Singapore household net worth, okay, or assets, you can see that it's steadily increasing. So our Singapore balance sheet, I call this the balance sheet, is very, very strong, okay, which also correlate with our Singapore properties price trend. If you notice that if you have been holding this property for the longest time from 1995 until now for 30 years, your property price would have increased by about 200%. Okay, so the key thing is not about whether there's a dip or what, but over long term, right, Singapore property price is still on the uptrend. Okay, of course, it cannot go one straight line up. Okay, so there will be some minor dip and up and dip, but as long as you can hold for the long term, Singapore property price will still go up on the uptrend. On top of that, right, if the situation were to worsen due to the imposition of the US tariff, which will cause the price of goods to go up, so this will dampen demand, because when things become more expensive, people will cut back on their spending. And with this, right, there's a high possibility that the US Federal Reserve may lower the interest rate, okay, so that they can boost the economy and avoid a recession. So when interest rate were to drop, right, what will happen to property price? Generally, when interest rate go down, property price will go up. Okay, just like what we saw during the COVID-19 pandemic, when the US Federal Reserve, they cut the interest rate to extremely low. They call it the QE infinity. Okay, so this causes the cheap money to flow into assets and property price go up significantly. But like what I mentioned earlier, if the tariff war were to escalate, continue to worsen, right? Of course, overall the market, the economic sentiment, people will cut back on their purchase, and this will definitely causes a slowdown in the property volume of transactions. And property price may see a little bit of dip, okay, which could go up to from 1% to as high as 5%. But I don't think that there will be a significant drop like what happened back in 1997 or the Dotcom Bubble burst, where it went down to as low as 20, as high as 20 to 30% drop. Okay, that is quite drastic. And I think that generally, like what I mentioned, now our Singaporeans have strong holding power due to a less speculative environment. Okay, and our income is growing up, steadily. Okay, and population is also going up, and Singapore land is scarce. So how will it drop by a drastic 20-30%? Okay, it's quite impossible. But of course, nothing is impossible, as I say again. But the likelihood is very, very low. Long-term property price will still go up. Okay, so I will wrap it up this topic on whether SG property market will crash. Okay, with this slide that I summarize here. So first of all is nothing is impossible. There is always a chance that Singapore property price may crash, but the likelihood is low, in my opinion. Okay, due to the reason that I mentioned earlier, now we are in a less speculative environment. And with our government strong reserve, I think that if the market is really were to be very bad, right, the government will definitely come in and rescue the market, okay, to ensure that we will not go into a deep recession. And also we have a lot of cooling measure in place for the government to play around with. So all these are all the safety mechanism in place, like all the brakes that the government can tap on to press on during an emergency. And number two is, like what I mentioned, now is a non-speculative environment. Okay, so we do not have so many speculators like what it used to have. So the likelihood of a crash is quite low. So do not rush to panic sell your property, okay? And the likelihood of a small dip short term, I think is more probable or likely. It could happen. I wouldn't say definitely will drop. But because of the market sentiment, right, is not good, right? And if the transaction volume were to drop, okay, this is the first indication. When volume of transaction drop, right, then it means that people are not so willing to buy now. Okay, but definitely there will be seller and buyer in the market run. Whether the market is good or bad, there will always be seller. Okay, but like what I mentioned, this seller already made like 30-40% gain. They just cut back on 5%. So is that really a drop? It's just I cut down on the profits because I need to exit in order to buy another property. My new condo has already TOP. I need to sell my HDB, for example. Okay, so I don't think slight dip may be possible because the seller will become more willing to negotiate. Okay, because they have a timeline to sell. And interest rate may fall if due to the high tariff. So this may actually boost the asset price, which includes property. Okay, so like what I mentioned, Singapore property price long-term trend is still uptrend. Okay, and I believe very strongly in Singapore property. Okay, and the key thing is about holding power. Most importantly, you must have the holding power, and you can definitely ride through the wave. Okay, I have come to the end of my video. So please give me a comment whether you agree or you don't agree with my analysis. I may be wrong because I'm not a god, right? But what I analyze is based on the history and what has already happened. Okay, and I strongly believe that right now, because we are in a less speculative market environment, I don't think a crash will happen. Okay, maybe just a slight dip. Okay, so do not try to time the market. As I always share with all my clients, okay, always buy based on your needs and want when you're ready. Do not think that I want to wait for the market to crash then I go in. Nobody can predict that, not even this investment guru like Warren Buffett. Okay, so please do help me to like and subscribe. I really appreciate a lot if you can help me to like, okay, and subscribe to my channel so that you encourage me to do more of such sharing if you find value in this video. So I'll see you in the next video. Bye.